All the things that are difficult over the last year of the economy, it'll be the reverse of that. I've got a handful of the top financial and economic headlines that I want to share with you. This involves deflation, oil, the Federal Reserve and interest rates, even stocks being in heavily overbought territory. The point of me showing you all these articles, they stood out to me, and it's about making sure that you are ready for whatever this economy is going to be throwing at you. Because the economy is going to be throwing a lot of things at you. We're right at the tipping of the tide, or the turning of the tide. The world is suddenly, finally recognizing that we are unable to pay down the debts that we have. We're unable to do anything other than create more money. And now the world is actually recognizing that for the first time. And happy Thanksgiving to all. We need it this year more than ever. Me, myself, I'm going down to Detroit for a couple of weeks. I hope you guys have a wonderful time and see all the people that you care about. And here's a fun one. Deflation could be coming this holiday season, Walmart CEO says. Prices have fallen, especially on general merchandise and on some key grocery items, he said. CEO Doug McMillon said deflation could be coming as general merchandise and key grocery items, such as eggs, chicken, and seafood, get cheaper. He said the retailer expects some of the stickier higher prices, such as the ones for pantry staples, to start to deflate in the coming weeks and months, too. For more than a year, consumers have coped with inflation that peaked around 4-decade highs and drove up the cost of nearly everything, including groceries, rent, and utilities. But McMillan's comments echoed what the government and other retailers said earlier this week, offering signs of relief for inflation-weary consumers. This channel is all about getting you profits quickly and easily. Please subscribe so that you get our guidance when it is still brand new and actionable. The market is entering deep overbought territory, and these stocks could be due for a pullback. The content of the article doesn't matter. I saw the headline. The first thought I had was, is it overbought? So I took a look at the Dow Jones Industrial Average, NASDAQ, both not overbought. And then I looked at the Russell 2000, which is a better, broader reflection of the actual overall economy. And it was mildly overbought, but nothing important. But then I took a look at the S&P 500, and it has been in significantly overbought territory for the last 4 months. When something's overbought, there's too many people moving into that investment and too few people selling it. It gets to a point where there can't be more buying because everybody who wants to buy has bought, and that's when things start coming back down. That's why when something is as overvalued as the S&P 500, with the relative strength index, the RSI, of 80, that's heavily overbought. Anything over 70 is getting into too much overbought territory. And you'll see that the overbought level has traded sideways or has moved sideways. It hasn't gotten more overbought because it's very difficult. It becomes more and more difficult to become even more overbought when everybody's already buying into the thing. But when something is this overbought, whether it's an index or just an individual stock, it almost always comes back down in short order in the coming weeks or months. Ray Dalio says the U.S. is reaching an inflection point where the debt problem quickly gets even worse. I often wonder if there's anything that Ray Dalio doesn't know. But listen to this article. Soaring U.S. government debt is reaching a point where it will begin creating larger problems. Thanks, Ray Dalio. Economically strong means financially strong, Dalio said. Thanks, Ray Dalio. The government spent $659 billion on net interest costs on fiscal 2023 to finance the debt. And about that, Ray Dalio said, that is a recipe for trouble. Thanks, Ray Dalio. But this is the point. Decades ago, I was talking about this. The problem was there then. And if you didn't deal with it then, you'll never be able to deal with it. And now we're years later, decades later. Of course, the debt has gotten to be too big now. I've been telling you that this is exactly what's going to be happening. We're going to have an economic crisis as this debt bomb explodes. Insiders stepped up to buy millions of dollars in these stocks in the past week. Before I show you the stocks they're talking about in the article, I want to mention that you shouldn't trust insider trading to tell you anything ever. Over a long-term time frame, insider activity has absolutely no correlation to better investing or worse investing. A lot of these insiders are notoriously bad investors. A lot of times they just need a few extra dollars to buy a new jet ski or some braces for one of their kids. A lot of times there's vested stocks that can't be traded or other ones have to be traded, or when you join a new company, you have to first, a lot of times, buy a bunch of shares of the stock that you're joining. If you're in an executive position, that's what they expect you to do. So there's been a lot of insider buying in air products and chemicals, Intel, Neuroma Therapeutics, Opco Health, and Mercury Systems. So follow that strategy if you want, but it's not going to work out well for you. These stocks could go up or they could go down, but it's got nothing to do with the insider buying. It's not going to tell you anything. U.S. crude oil fell into a bear market this week and could head lower as China haunts the market. When an economy slows down, it uses less oil. So as Germany's slowing down, Canada's in recession, America is starting to slow down, China's slowing down dramatically, other countries in the European Union, and as they slow down, they use less oil. Less demand on oil lowers prices. That's why prices have been coming down the last few days. The reason they say China haunting the market is because China has notoriously significant financial concerns right now. Their entire economy is having major earthquakes. U.S. crude oil prices entered a bear market this week, down 22% from September highs as traders wrangle over whether the spiral is driven by market fundamentals or just speculation. What truly drove the sell-off this week is up for debate, with some analysts pointing to the role hedge funds are playing in the market, while others say there is more a fundamental supply and demand issue at work. The bearish narrative is driven by worries that supply is increasing as demand threatens to slow in the U.S. and particularly in China if the world's two largest economies dip into a recession. The Fed's Susan Collins says more rate hikes can't be taken off the table yet. I've seen numerous Federal Reserve representatives over the last few days coming out and saying, everybody slow down, hold up, we're still going to raise rates, we're still going to go for 2% inflation. With this last recent pause where they didn't raise rates or lower rates, with that pause, the market suddenly thinks that the rates are not going to go up anymore and that they're going to come down several times next year. Maybe true, and I hope so, but all the Federal Reserve officials are saying not so fast because they may be going to raise rates another time or two. You never know. But the ones who get to make decisions going forward are saying we have not yet pivoted. Whenever the Fed's official pivot gets here, which will almost certainly be within the first 6 months of next year, that's going to be excellent for gold prices. It's going to be really bad for the dollar. It's going to make oil cost more. But it'll also take off a lot of pressure on you, on your shoulders for your auto loan, for your mortgage. All the things that are difficult over the last year of the economy, it'll be the reverse of that. Please click like on this video. It really helps us get our message out to other like-minded people like us who can really benefit from it. When I see something and I think, oh, you guys would really like this, I want to make sure to show it to you because I want to give you the full look, the full picture of what's going on with the economy so you can make the proper decisions going forward. You decide what you want to invest in, what you want to not invest in, things you want to avoid, where are the risks, where are the opportunities. You have to be part of this equation. You need to help take all this information I'm giving you and put it in your own head, mix it around a bit and think about what does that mean? What would be the best decision and the best move for you to make right now so you'll be in a better place 6 months down the road? And remember, the Peter Leeds sale is active right now, but it won't be for very much longer. We're going to shut it down and I hope to never do it again. You can save rebates of $50, $60, or $100 on various Peter Leeds products, all detailed below this video.